Welcome to Deal Dynamics. This podcast is all about selling your IT and tech business. We'll tackle topics like how to sell your business and how to manage the process. Don't forget to subscribe, hit that like button, and comment on what you'd like to see in future episodes.
This episode, we're going to take you through our process and explain to you why we do what we do to help maximise the return of you selling your IT or tech business.
Well, I guess our process starts at the very beginning and bringing shareholders and us in an advisory firm to be aligned with what their objectives are and what they want to achieve. That often means doing a transaction readiness report, which is totally free, totally bespoke, and non-committal. It gives them a chance for an expert in the industry, venture corporate finance, and our transaction team to look under the bonnet of a business to find all the positives and negatives within the business. The transaction readiness report really is two things. It allows us to understand what are we looking at and understanding the business, the proposition, how due diligence ready are they, the valuation, what would our recommendations be for should they not decide to go forward with an event, and understanding all facets of the business so we can make recommendations back. Yeah. When we're looking at the business, I guess from your point of view, Steve, from the transaction team, what do you want to find out about the business?
Yeah, I think the thing to mention at this point is that this is a report made by experts in this industry who have worked for other corporate finance firms who would charge £15,000, £20,000, £25,000 for this. And that's something we've committed to never do, because we believe that experts in the market should seek to understand your business to know how best to take you to market. And that's something you shouldn't have to pay for, or the entrepreneur shouldn't have to pay for. As head of the transaction team, we're looking for a number of things in our transaction readiness report, from the mundane, confirming shareholder agreements and shareholder splits, registered offices, staffing levels, to the more intricate, which is the level of recurring revenue, the profitability within your business, and not just the profitability, the adjusted profitability, which is where our skill set really adds value.
The valuation that comes from the review, your team, Steve, pulls together the analytics and the understanding of the business.
Yeah.
Our analytics team then review that against the market, our valuations that we've achieved in the business, because we've gone to market 10, 15 times in the last 12 months for IT tech businesses. So we know from speaking to 150 to 200 buyers in the UK and Europe what they're all willing to pay for these types of businesses.
Yeah.
Our analytics team put that together with our internal knowledge, which gives a market valuation. Sometimes that's good and sometimes it's not.
Yeah.
And within that readiness, is it right that there will be a valuation and a readiness for sale? How ready is this company to sell?
Yeah, we look at a number of factors, up to 20 factors that we know buyers are looking for within a business, and we check and mark and assess the business we are looking at to see where they stand compared to what the buyers are looking for. It can be recurring levels, the contract levels, the customer churn, customer concentration, a number of factors we know, because we are advising on the most deals in the marketplace, that buyers are looking for, and we can give you, the entrepreneur, an honest assessment of where their business sits. It might be that they need to take that report and go away for 6 months to get the business right, to maximise the value. It might be the value's there, everything's ready, let's go.
And how long would this review take?
Well, it's not something that's a template. It's a bespoke report, and so is done. It's a two-way iterative process between us and the entrepreneur to give them something of great value. So it would be, if you're looking at timescales, it would be between 4 and 6 weeks. quite a commitment. We ask for quite a commitment from the entrepreneur in terms of information, follow-up, conversations, to give them the report that is meaningful and helpful to both parties.
And resultantly, if you've spent this amount of time looking at the business, after that period of 6 weeks, they presumably have a portion of data that they can then use if they go and sell in 6 months, in a year, in 2 years.
Precisely, that's an excellent point, Jack. One of the main reasons we do it to align on values, and then if we decide, the entrepreneur decides they want to go, we have all the information ready to go and create marketing documents. And that's why we can boast probably the quickest deal times from engagement to completion in the marketplace.
And how do you think this would compare? There's lots of platforms out there that are offering valuation reports, and here it is, give us this bit of information. How do you think what we do compares to what they can buy off the shelf or some of those other platforms?
Well, he would say that, wouldn't he? But I think we stand far above the other non-chargeable offerings in the market, where you're just filling in an Excel sheet and valuation pops out of the bottom. That's not what we're about. We're about understanding the business, understanding the individuals involved, understanding what you do and how you make your money, and the quality of the earnings, from the customers to the contract levels to the staff. And it's a really in-depth process that allows us to arrive at an accurate valuation. And you would have to query some of these platforms. They're not specialists in the sector. They don't know. So you have to treat their valuations with a huge pinch of salt, if not a degree of scepticism. That's not something you would ever have to worry about with a transaction readiness report from us. We're speaking to IT tech buyers every day. We're doing 12 transactions within the last 12 months. We know what IT and tech businesses are selling for in the marketplace.
Yeah, ultimately those one-click transaction reports or valuation reports don't factor in who's buying, at what price they've been buying over the last 6 months.
Yeah.
And I think that's definitely something to consider when you're making a decision on which free service you're going to use.
There's a stigma with free service, as is a service we don't charge for, but it's not a cheap free service. Yeah. It's a premium service that we position ourselves in the marketplace, that we don't charge for it because we feel it benefits us to understand the business and be able to take them to market quickly.
I think another point that we can make is that when we do look at a valuation for the business, we're not valuing the business to try and win a mandate. We're valuing the business at a market rate. So whereas you've got other competitors in the IT, telco, software space who are putting large valuations on a business to try and win a mandate because they'll no doubt get paid a retainer, our commercial model is there's no fee for our review because it's mutually beneficial to understand the business. There's no fee for retainers. So we only get paid when we get to heads of terms. So that means what's the point in overvaluing a business when we go out to market and we can't get buyers at the valuation that we've promised? So we need to be market accurate, whether the shareholders like it or don't like it, and sometimes they don't. But it is what we firmly believe is the value of the business, because when we go to market, we know we will be in that medium to high end range.
Yeah, definitely. So would you say a valuation gap in expectations is one of the biggest killers when it comes to a deal?
Yeah, and then all of a sudden you see them 12 months later, they're locked into a 12-month contract with the broker who's told them they're going to get £10 million versus our £8 million valuation, and they've gone round the market, they've realised it's 7.5 to 8.5 million, but they're locked into a broker's contract that they're either going to have to pay double the fee or they're going to have to accept a lower valuation. But a sour taste for the shareholders because the expectations haven't realistically been set at the beginning. It's not what we do. It's one of the reasons why we set up venture corporate finance and the way we do the model we do is because we really want to work with the shareholders. We really want to be very open, honest and transparent with the shareholders. We want them to know what they're getting into from the very, very beginning. It's key for us because we are spending time, effort and our own money internally on resources to take them forward into a process that we need to be successful on. So their benefit is that they know full well if we're going to engage with them, we're going to be very successful in getting that outcome because we're aligned.
Yeah. I think just to take a step back as well, we've sort of fallen into the trap that we always do of focusing ourselves on valuation, because that's ultimately what the IT entrepreneur, the business owner wants to understand.
There's more to the review than that.
There's a lot more to the review than that, and it's the name. The clue is in the name. The Transaction Readiness Report. It's both valuation and it's your readiness to sell. We look in great detail through your business contracts, T's and C's, revenues, your supplier contracts. Are there any things in there that is going to stop or erode, stop the transaction going ahead, or erode value during the due diligence process? And that's something that this Transaction Readiness Report will give you. So we've made the mistake of talking about valuations as we always do, because that's what everybody's interested in. But there's so much more to it. A value is only a value if you can get through due diligence and get to the end of the transaction. Our record shows people get to the end of the transaction with us.
I think ultimately building a business to sell, even if you never have a plan of selling it, will ultimately lead to a more successful business at the end of it. And our review and looking at the transaction readiness from a valuation perspective, fine, that's what the entrepreneur wants to know. But before that, there's the whole piece, which is my business ready to sell, which is saying, is my business performing in the best possible way from the perspective of a buyer, but also from the general market and from your own performance as well. Yeah. I mean, we can assess that.
It would be great if we could value every business and do a review for every business, and every business is ready for sale. Every business hits the valuation and shareholder and venture corporate finance are happy with it, and everybody's all aligned. That would be great if that happens on every review, but it doesn't. We have many reviews where unfortunately things have been highlighted in our due diligence review that says unsellable at this moment in time, or unsellable because of maybe some tax issues or maybe some financial issues.
The classic example from a few weeks ago, one of the transaction team was obtaining information from a business. They sent over handwritten accounts. It's immediately, you're going to have a big problem there, no matter the size of the numbers on that.
Yeah.
Handwritten accounts are a red flag for any buyer, and this Transaction Readiness Report would highlight that, rather than you get into a process and it crumbles at that point.
And the business might be performing really well before. Yeah. They might be really profitable, but they just haven't kind of transitioned that piece of the business over. And obviously handwritten accounts is quite a specific example, an extreme example. Yeah. But I think that point stands where it's like, we can flag things to you that you maybe hadn't been aware, because we're always speaking to buyers. Yeah. We know what buyers are looking for, and often the clients aren't speaking to buyers every day. They just don't know what they're looking for.
This is a one-off event for most people, so they don't know what the future is in terms of this whole process. So, and that's our chance to be able to do it. We also had another one from your transaction team, which we got to the valuation, but the shareholder was putting a lot of his costs into the gross profit. Now, that's something which raises different flags, and we set him off to help support and give him a tax advisor to help support him with that. But he wants to go ahead and sell his business, but us as advisors, at the valuation that we've agreed, but us as advisors saying, sorry, no, because you have something fundamental in your business that will stop at due diligence. It's just not prepared. It's just not ready. So that'll take 4 or 5 months, and then hopefully he'll be back and the business will be much cleaner. It's about helping educate the shareholders as to what journey we're about to take on with them, and the quantum and size of that journey and how hard it's going to be sometimes.
Yeah. But it's only by creating this transaction readiness report that we know people are ready for sale.
Yeah.
And that's why we do it. And that's why it's of the quality it is.
What happens at the end? We've presented the report, or the report's finished, what happens?
Yeah, well, the report will include conclusions, strategic options, next steps. There's the opportunity to embed our unique IP software into your financial accounting system so you can report and get in line with what the buyers are looking for. It's very much a first step on a road to a sale or advice with us.
So in summary, really, the transaction readiness review that we have allows shareholders to become aligned with the process for either selling your business or raising funds. It gives them the answers to a lot of the questions that they will have. Am I ready to sell? Will I get the valuation for the business that I'm looking for? What can I do that's positive and negative in the business? And what does the future look like if I am to go down the road? Really, what else do I need to do? It ticks a lot of those boxes. It's free of charge. It's fully bespoke with our transaction team who are experts in the industry. And it's there for you shareholders to maximise.
Thanks for listening to the Deal Dynamics podcast with your hosts, Gary Smith, Stephen Taylor, and Jack Chiappi. Please subscribe to our channel, like the video, and comment on what topics you want us to discuss. Don't forget to sign up for our newsletter as we provide insights, reports, deals, events, trends, and more. Just head to venturecorporatefinance.com/newsletter to sign up for free. The link is also in the description. That's all for now, folks. See you next week.